right, let's get stuck in. We only have a 55-minute session today, and we are looking at forms of ownership. Right, you have done forms of ownership for the last 5 years. You have built on it on every year on year. You started in EMS grade 8 and 9, and we have touched on it in 10, 11, and 12 business studies. And this is part of the business ventures section of work.
Mr. Edwards, if you allow me, I just want to give a bit of a warning here. Guys, this is a very technical section of work, and from experience, I know it's also not always well answered at the end of the year NSC exams, because there's a lot of abstract terms in forms of ownership, which we will deal with today. But guys, please don't shy away from it. You need to understand, and if you don't understand the terminology, even at the end of today, please make sure that you touch base with your teacher, because it's such a large section of work. If you don't understand it, rather go and ask your teacher and ask for assistance so that you understand, especially the terminology. That's the backbone of the whole thing.
Fantastic. We will be starting off with the key concepts in a moment. All right. First and foremost, if we look at the different types of forms of ownership, as you well know, in EMS, you would have started off with those sole proprietor, partnership, close corporation, and then your private and public companies. We have added on to that when we get into the business studies side of things. We start looking at cooperatives. Then under companies, we have non-profit companies and profit-based companies. Non-profit companies obviously being non-profit organizations, NPOs. Then under profit companies, we have private companies, public companies, personal liability companies, and state-owned companies. Now, traditionally in these sections, I just wanted to add here, sorry guys, that the sole trader and partnership are they are not separate legal entities, and now we will get into that concept in a moment. And then if we look at the separate legal entities, you look at the close corporation, cooperatives, and companies. All right, so please keep that in mind when we go through the key concepts, that sole proprietor and partnership are the only examples where it is not a separate legal entity. Now, on that, the important terms that we need to take into account, and this was introduced to you in EMS grade 8, and I still have occasions where I speak to grade 12s and they're not 100% sure about these concepts. If you do understand these concepts, it goes a long way to you understanding the characteristics, the advantages, disadvantages of each of these forms of ownership. Right, so let's have a look here. When we took a look at a legal entity, or what we call a legal person, all right, humans are considered natural people. We can enter contracts, we can own businesses, make debt, and can sue others and be sued. So we are considered legal persons in our own right. So if you are 18 years and over, you can enter contracts. The same applies to some forms of ownership. According to the law, we also have the legal persons or legal entities. These are businesses that can exist and operate independently from its owners. Now, just to explain that, it means that they actually have the characteristics that you and I would have as 18-year-olds and above. You can enter contracts. Yes, you will have your directors signing on behalf of the organization, but it does mean that you can have the big organizations like Microsoft, like ShopRite, that have a legal standing, a legal characteristic, which allows them as ShopRite to own other businesses, to be sued, to enter contracts in their own right. So it is different in the likes of a sole trader or a partnership, where the legal entity, which is the individual, and the business are one in the same. Right, so if you understand the whole concept of a legal entity or a legal person, then we move on to the next concept, which would be continuity. All right, because we know that a business like ShopRite can work independently from its owners, that means that it's got unlimited continuity, which means if an owner dies, or an owner leaves the organization, then the business can continue regardless of where that owner is. All right, so just for example, if I own shares in a particular company like maybe Microsoft or ShopRite for that matter, and I pass away, it means that the organization can continue on. All right, the shares may be passed on or it goes into the estate if I do pass away. So that is unlimited continuity. Unfortunately, in the instance of a sole proprietor or a partnership, there is limited continuity, which is obviously the opposite. Where an owner dies or leaves the organization for any reason, the business needs to dissolve and then restart. Be it if there's 2 or 3 people in a partnership, but obviously if it is a sole trader, if that person passes away, then the organization will need to restart.
Mr. Edwards, I normally explain it like this. For many of the kids, it's very difficult to understand limited continuity in the terms of a partnership, for example. Now, what happens to all the assets? Now, if I have, let's say, a sole proprietorship and I die, my son can carry on. Absolutely it can, but those, the bank account belong to me. The assets actually belong to me. All of those things need to be transferred to him. It's basically a new business that he needs to start, because in a sole proprietor or a partnership that is not a legal entity, those things cannot exist without the owner, because it's the owner's bank account, it's the owner's assets, and the owner's everything. So if a partnership dissolves, whose assets are now needing to be redistributed? That it doesn't work like that. But in a legal person, those assets belong to the business itself, not the owners. It's the business who owns it. So it carries on regardless.
All right, and that obviously links to our next concept, which you might have come across, and that is liability. All right, so when we look at liability, ladies and gents, it means that businesses can make debt on their own and therefore must bear the responsibility on its own, right? So when the concept is unlimited liability in the sense of a partnership and a sole trader, it means that the owners are held responsible for the debts of the business. So if the business needs to go and get a loan from the bank and are unable to pay off that loan, then the business owners, the partnership or the partners or the sole trader themselves are legally liable in their personal capacity, right? So the example I always use in class is if you owe money as a business for a sole trader partnership and you are unable to pay it back, then the bank can repossess your house, for example. They can repossess your vehicle in order to pay back the debt of the business. It's very different in the respect of a close corporation or a private company, right? That is limited liability. The owners are only responsible for the original amount that they have invested in that business, right? So if the business owes money, the only amount that owner, the shareholder, can lose is the portion that they have invested in that business. So their personal possessions are protected under law in that respect, right? So liability, you've got 2 types, limited and unlimited liability. All right, and this only happens, the limited liability can only happen if the business is a legal entity in the sense of a private company, public company, cooperative, and so on. All right, so those are 3 very important terms, and as I said right at the beginning, if you do understand these concepts, it goes a long way for you to understand the characteristics and advantages. All right, moving on. If we look at this diagram, you'll have this in your notebooks in front of you. It's a great summary of the different aspects that you need to consider in forms of ownership. Now, in grade 10 and 11, you would have been introduced to all the forms of ownership: sole trader, partnership, close corporation, and so on the left-hand side. Right? We have just spoken about those 3 concepts: liability, legal personality, and continuity. Obviously, liability, you've got the limited aspect and the unlimited aspect, right? And then legal personality, you've got the have and does not have a legal personality. Then continuity, you've got limited and unlimited continuity, which we have just spoken about. Okay, obviously that was grade 10 and 11 where we've discussed that. Now we introduce a different way of asking a question in grade 12, and that is on the right hand side over there. You've got criteria. So you are going to be asked a question such as discuss the success and failure factors in terms of criteria like management, tax implications, capital, division of profits, and legal requirements. You might be asked to discuss this in terms of a partnership, a private company, and so on. Right, so that is grade 12. So this is where we've built onto the foundations that you had from grade 8 through to grade 11 for forms of ownership.
Mr. Edwards, I just want to just make it very clear to them that the characteristics and all of those things, you guys still need to learn. Although it's 10 and 11, it's still accessible in grade 12. So it didn't go away. You still need to know those things very well. And guys, it's very difficult for me to say. Normally I would say to you, remember 5 bullet points or 5 characteristics. In the case of forms of ownership, you actually need to know all of them, because it can be hidden in a case study and you need to go and identify a form of ownership from the characteristics. And then of course the advantages and disadvantages that came also from grade 10. You need to know those things, because that is going to be the impact and the success and failure factors that you would need to discover or need to be able to discuss a bit later. So it comes from all of that information. The criteria comes from the characteristics of a particular form of ownership. So you guys need to be able to know that. And of course the differences between forms of ownerships also come from the characteristics. So just be very mindful of that.
Right, what you will see in your workbook, you will see the success and failures with regards to the criteria, those 5 criteria, in terms of sole trader, in terms of partnership, private company, and so on. We're not going to go through each and every one of those because it becomes quite repetitive. So we're going to give you an example as to how these sorts of questions can be asked. All right, so let's carry on. We are obviously going to focus on the criteria, the grade 12 aspect of the forms of ownership. So let's have a look over here. Success and failure in terms of, and those are your 5 criteria: the management of the form of ownership, the tax implications, how the taxes are paid and what sort of percentages do they get charged, the division of profits, how are the profits divided in and amongst the owners of the business, the legal requirements for establishing the business, and obviously the capital that you can gain from a particular form of ownership. Right, so the example that we're going to take you through is the success and failures of a public company. All right, so in terms of a public company, we are going to look at management first. Right, the management of a public company, you obviously have a skilled board of directors that can make good, solid decisions, right? You've got shareholders that can vote for those capable directors at an AGM. So if the directors are seen to not be doing the job that they're expected to do, then they can be voted out. All right, then we have the failures of the management aspect of a public company. Directors' fees can be very expensive, obviously affecting your potential to make profit. And then large management structures also take time. So now you would know from a characteristic of a public company is that you need a minimum of 3 directors in order for the business to take place, right? And that can take a little bit of time. So those directors are responsible for making decisions, and that can take a little bit of time.
Okay. Mr. Edwards, I just want to also explain to grade 12s here. There is a big difference between a director and a shareholder. A director is a professional manager that is appointed by shareholders. In many cases, in most cases actually of public companies, the shareholder has nothing to do with the management. The management is run by the directors, and the directors in some of these public companies do not own 1 share of that business. They are basically appointed managers, and they don't come for free. These guys come with a huge track record, and you need to remunerate them for that. So the shareholders pay the directors for their services as professional managers.
All right. So the first criteria was management. So we now move on to the concept of taxation. Now, obviously, all the forms of ownership are taxed in different ways. So a public company pays a fixed tax rate, all right, on profits, and that can be quite high. Tax rebates, are also available if you are involved in CSI projects. Not evading tax helps them get government tenders and renews licenses, right? And then you've got your negative though, and that is a concept of double taxation, with shareholders paying secondary tax, which might discourage some investors. So let's just explain the double taxation aspect. So your business itself, your public company, gets charged company tax. Then when the profits are paid or divided amongst your shareholders in the form of dividends, then the shareholders are then also charged tax on that income that they receive. So that's a double taxation that might put off some shareholders. All right, the next one that we talk about is capital. All right, capital, understandably, a public company, your shares are available to the public. So that's a big aspect there. Shares listed on the JSE for wider investor reach. Right, you can increase capital by selling more shares and debentures to the public. So that is a great benefit for a public company. The unfortunate thing is that share prices change all the time and they may lose value. So that is a failure of the capital criteria of a public company. If the share value decreases, then shareholders might decide to sell their shares, and they're able to do that because they are freely transferable. You might recall that as one of the characteristics of a public company. All right, obviously the more shares, the more equals more dividends paid out and less retained profits to the business. So shareholders expect to get a share of the profit through dividends. If you're not paying a share of the profits, dividends, then again, shareholders might be unhappy, and that if you do pay those dividends, then you are reducing the profits that might be put back into the business to expand the business or purchase other organizations. All right, that is capital. Right, we now look at division of profits. How are the profits divided amongst shareholders? All right, high profits obviously boost the company's success and the share value. If the share value is increasing, then your shareholders will probably be very happy with that. All right, and they'll get a share of the dividends or the share of the profits as well as a dividend. Profits can fuel business growth through reinvestment. So they reinvest into the business, as I mentioned before, and that allows the business to grow. Shareholders might sell shares. I did touch on that a little bit earlier. If they are not receiving dividends or if the share price has decreased, they feel like they're not actually getting a return on their initial investment. So they'll sell their shares. And the more shares that are sold, chances are the share price might continue to fall. Inconsistent dividend payouts can discourage investors because a lot of investors are investing in these organizations as a form of income, particularly your retired folk. They will invest in businesses with the hope that they are getting an income through dividends. If you're not paying dividends on a continuous basis, then that can be problematic and investors might look elsewhere.
Mr. Edwards, I would also just like to add something in terms of dividends. Now, guys, dividends is the way in which all companies divide profit. Now, earlier in the year, we did investments, and there we spoke about investing in shares, but I don't want to go and redo that. But what I want to actually say to you is that company is under no obligation, the management of a company is under no obligation to declare a dividend. They might make a lot of profit and decide not to declare a dividend. So the profit is not going to be divided among the shareholders. And the reason why they might do that is to retain that profit and reinvest it into the company, maybe buy a bigger premises or new machinery or whatever, to create shareholder value later on so we can produce things cheaper or whatever the case may be. But they may decide not to actually declare a dividend at all, and that is accepted as good management practice from time to time.
Mr. Vansel, if I can use a prime example there, Amazon. Amazon is known not necessarily to be paying dividends, but shareholders stick around because they can see the share price value increasing over time. So they are known for not necessarily declaring dividends all the time, reinvesting the profits that they've gained into the organization, and shareholders are happy because they're seeing a potential return on their investment when they decide to sell their share. So they may have bought a share for $1,000, but in years to come they might sell that share for $3,000. Then that's where they're going to get their return, the difference between the two. All right, so the last aspect that we look at, the last criteria, is the legal requirements. Now, you know by now one of the main characteristics of a public company is that it's a big company, and it takes a lot to actually create that company. But let's have a look at the success factors. It must comply with the Companies Act, and all organizations need to do so. If they do not, as you can see on the right-hand side, one of the failures, if they do not comply to the Companies Act, then they might have their license withdrawn and have to be removed from the Johannesburg Stock Exchange. So that would be a major negative. But it does force organizations to comply. Right? Limited liability obviously encourages shareholders to invest because there's less risk to the investor because they can only lose what they have invested. And auditing obviously ensures that the management are held accountable and they are doing the job that is expected of them. All right. The negative, though, the failure of the financial statements is that it is expensive to have your financial statements audited. So that may minimize the potential profit that you gain as an organization.
Right. Mr. Edwards, I would like to also add, the only reason why you really want to start something like a public company like this, the only reason is to generate large amounts of capital. Now, don't confuse generating capital with generating profit. This means capital that I need to buy new equipment or machinery, capital that I need to expand my business and buy other businesses. That is what we need capital for. And the only reason why we would start a public company is to generate that large amounts of capital. Okay, so that is very important to remember. You get smaller companies, like private companies, who cannot generate that amount of capital because they cannot sell their shares on the JSE, but they have no ambition to actually grow that big from time to time. So that is something that you need to remember.
An example of that, Ms. Vansel, Facebook. All right, Facebook went from a privately owned company, private company. They sold a number of their shares and became a public company. And with that capital that they gained, they were able to purchase companies like Instagram, WhatsApp, and now they've become this massive conglomerate that they are today. Right, and that was only through becoming a public company and gaining access to that capital. All right, that brings us to the end of the section that we're going to be the theory part. We are going to now go through some example questions that you might come up with. Right, so I'm going to hand over to Mr. Vansel, who will take you through this section.
Right, okay guys, what you've got on the board there is a case study. Now we are going to go through the case study, and from the case study there's a number of questions that you can answer. Now guys, it's very important that you read the case studies thoroughly. These days we don't write case studies that is as big as that, but all the information that you need to answer the question is in that case study. So it's about Wilson Electrical Components. Guys, I'm not going to read the case study for you, but we are going to go for question 1.1.
Ms. Vansel, I just want to draw the learner's attention to 1.3 just quickly, which is an example of what we've just been speaking about, the grade 12 aspect. Right, there's a question that Ms. Vansel will take you through where it says, analyze how the following factors can contribute to the success or failure of a public company. Now, we've actually gone through those right now, so just keep that in mind when we're going through that question.
100%. Let's start with the easy ones first. It says 1.1, identify the form of ownership that WEC is trading under currently. So we are not looking at the future, we are looking at what it does now. So the first sentence says Wilson Electrical Components Pty Ltd is a medium-sized manufacturing business. Now guys, the clue there is in the Pty Ltd. Now guys, every form of owner or every company, the name has a specific requirement. The name of a private company must always end in the abbreviation Pty, that stands for Proprietary Limited. Now that Pty Limited already tells me that they are currently trading as a private company. So that's the only answer that could be. Right, they didn't ask you to discuss it any further, so that's your 2 marks. The 2 marks will be for identifying it. The next one says, tabulate the differences between the form of ownership identified in 1.1 with a public company. Now guys, as we said to you earlier, those characteristics you need to know regardless whether it was done in 10 and 11, you must still know it in grade 12 and it's accessible. And you would also need to differentiate between all the various forms of ownership. So in this case, we are looking at a private company versus a public company. Now guys, I could also ask you to differentiate between the two in terms of taxation, in terms of ownership, in terms of division of profits, or whatever the case may be, those characteristics that you need to know. So in this case, they just asked you to tabulate. Tabulate means that you need to draw a table. These days, we don't really ask the term tabulate anymore. We do ask the term differentiate or distinguish or something like that. Right, so let's just quickly go through those differences. Okay, now if you can just go slightly on, Mr.
There we go. Apologies.
There we go. Right, there we go. A private company requires 1 or more directors and 1 or more shareholders. Now guys, that comes from the characteristics, and you can see the split mark there because that is typically how you would answer a middle order question. Right, a public company requires 3 or more directors and 3 or more shareholders. Guys, there's nothing to understand there. It's just something that you need to remember. Okay, the next one says the name must end in Pty Ltd, and the name must end in a public company in Ltd. Now guys, when you answer a differentiate question, you must always make sure that the differences are clear. Some of the things in companies are similar. They are all managed by a board of directors. So if you say a private company is managed by a board of directors and a Pty and a private company is managed by a board of directors, that's not a difference. It's the same, so we can't mark that. You guys understand? You need to show where the differences come in. Now, the big difference between a private company and a public company is a private company cannot sell its shares on the JSE. That is private, proprietary between the shareholders of that private company. In fact, if you want to sell your shares, you need to have the permission of all the other shareholders in a private company. We say those shares are not freely transferable. But in a public company, those shares are freely transferable. I can sell it when I want, to whom I want. And that is the big difference between these two companies. Now, guys, I'm not going to go through every single bullet point there. What you need to really pay attention to is the split marking. Right.
Ms. Vansel, I think I just want to emphasize the importance of 1.1, getting 1.1 correct.
Yes.
Because if you had put 1.1, you had identified the answer as a close corporation or a partnership, it means that the following questions, if we go back to the actual questionnaire, okay, the following question 1.2, you are also going to get aspects of that incorrect, because it's so important that you've identified 1.1 and you know the differences between the forms of ownership. Otherwise, it's going to affect the further questions.
Mr. Edwards, maybe it's very important for them to also remember, know at least for every single form of ownership how the name ends. What is the requirements to the name? Because that is how you identify it. And I like to ask questions either in section A or questions like that where you have to identify the form of ownership. Mostly you identify it from the name. So please make sure that you know that. A private company, Pty Ltd. Public company ends in the letters Ltd. A personal liability company is incorporated or INC. So you need to know those things like from like the back of your hand, because that will make it very easy for you. Right. Now guys, the next question is really grade 12 work. It says analyze how the following factors can contribute to either the success or the failure of a public company. Now guys, all of the forms of ownership have success and failure factors regarding these different criteria. The first one is management and the second one is tax implications. Now guys, I want you to look at the mark allocation. In both cases it is 4. Now guys, I would advise you when you study the success and failure factors, I wouldn't remember or I wouldn't expect of you to remember more than one success and more than one failure factor under each of these criteria. Make sure that you know at least one out of each, and then you should be okay. Even for section C, because they won't ask you just one factor, they will ask you more than that. So one success factor, one failure factor out of each of those criterias. Okay, so let's have a look at management. Right. The success of management, managed by at least 3 competent, highly skilled directors. Remember that you can appoint whoever you want, and because public companies have access to large amounts of capital, they can also afford to buy or to pay the best directors that there is. So they are managed by a competent board of directors. Right. A failure factor in that case, those directors may not have a direct interest in the company. Guys, what that means is that director is appointed like any other employee to do a job, and his job is to manage that company. In some cases, these guys don't even have shares in the business. He has no direct interest. He's looking at this just out of the perspective that he's doing a job. So that is what the personal interest means, which can hamper the growth and profit maximization because you don't have the buy-in like you would with the owner of the business. Right, a success factor again, the management of the company can improve. Why? You can see now for the split mark, I'm answering the question why. Why? Because directors are accountable to the shareholders. Guys, if the directors mess up, then at the next AGM, they can be fired or they can be voted out, and you can they may have a bad track record and not be able to move on to a next company because they have messed up and won. So it's very important for them to be as competent as possible. Right, the next one, shareholders can vote for or appoint the most capable directors to manage their company, which we have already explained. In terms of failure, large management structures. Public companies are mostly large types of businesses. Now guys, the more people there are that needs to make decisions, the longer it takes, because everybody has an input, and that can make the decision making take a lot of time. Right, the next one, directors' fees increase the company's expenses. These guys are professional managers. You need to remunerate them for that. And guys, they don't earn 1 or 2 rand. They earn quite a bit of money. And that, of course, is an expense for the business, and that makes your profit a lot less. Right, that is management. And then the next one is, of course, capital. Now, guys, the only reason why I want a public company is to raise a large amount of capital. Now, public companies can raise large amounts of capital because they sell debentures and shares on the JSE, right? And if they need more, I can always sell more shares. A public company shares are listed on the JSE, which gives the company exposure to more potential investors. But guys, in terms of failure, the growth is limited if sufficient capital cannot be raised. Sometimes the shareholders are not, or potential shareholders are not interested in investing. You've made a lot of expenses getting your company registered on the JSE, and now you don't get the share capital that you always wanted, and that makes it a lot difficult then for the business to move on. And the current shareholders will also not get the value of that. Right, the second one says large amounts of capital required to start a public company. Guys, public companies are not for somebody that wants to start an ice cream stall down the road. It is a company that you start with the intent purpose, I want to do something big. I always use the example of an airline. Guys, you can't start an airline with no money. An airline costs a lot of money. You need to buy the planes, all the equipment, everything that you would need, and that requires large amounts of funds. And the only way that you can get that is through direct investment through the public. Okay, the third one, raising extra capital may be difficult if the economic climate is unfavorable, or the share prices change all the time. They may lose value. Now, guys, what that means is if people are in desperate need and the economy is taking a downturn and people need money, they're going to start selling their shares in order to realize the money that they can use to survive. Or when there's uncertainty in the market, what sometimes happens is the companies rather would like to have their money in cash available rather than put it into shares that are risky. So when the economic climate change, then of course the share prices fall as well, because there are more people selling it than what there are people buying it, and that decreases shareholder value. Right. Mr. Edwards?
Vincel, as a marker, how would we have marked this for 4 marks?
For 4 marks, you would have 2 marks for the success factor. Now that's why I tell you, remember, one success factor, 1 failure factor. So the success factor you can see there is 2 marks, and then you give me 1 failure factor, that's 2 marks, and that will give you 4.
Okay, fantastic. So keep that in mind. It may make your studying slightly easier if you're just a little bit more clever or, with regards to how you go about studying and what you're studying. All right, we're going to move on to the essay type question. All right, as you can see, it is an extended section B type question. Ms. Vincel?
Right. Guys, when it comes to essay questions, an essay question is actually the place where you make up marks. In this case, you will see, probably if you see the memo, you would see that there are always something like 50 marks available where you actually only need 32 of them. But there is a specific format that you need to answer a section C question or an essay question. It always starts with an introduction. The word introduction must be there, and then I'm looking for 2 sentences that refer to the 4 bullet points in the question. Now, Mr. Edwards, if you can do me a favor in just going back to the question, you can see that there are 4 bullet points there. The first one says outline the characteristics of a partnership. 2 is explain the differences between limited and unlimited liability. The third one, differentiate between a private and a public company. And the third one, advise businesses on how the following criteria contribute to the success and or failure of a public company. Now, guys, your 2 bullet points for your introduction must speak to one or 2 of those bullets. Now, guys, you can use this, for example. What is a public company? Then you write there, what is a public company? Because it speaks to one of those bullets. Or you can say, what is a partnership? Or the other alternative is why. You can ask the question why. Why would we start a public company, for example? There's 2 different answers, speaks to 2 different bullet points, and that's 1 mark each. Guys, what I do want you to see though is that there's a leading statement that starts, partnerships have been very popular. Guys, that leading statement is only context. Please do not quote anything from that leading statement because it will be marked as a repeat. You cannot quote from the leading statement anywhere. Right, Mr. Edwards, if you can just quickly go for me to the next one. Right, so in your body, your first bullet point starts there. That's your body, and that was outline. Normally it starts always with the question outline. Now guys, what I want you to do there as a tip, always write the question as your heading. This is your first heading in your essay. You've written the word introduction, 2 bullet points there. Now you're starting the body outline. Write that as your heading. Even if you know nothing about a partnership, you've forgotten, write the heading, leave it blank for later. And then you start with the next one. You write the heading, explain the differences between limited and unlimited liability. Now you answer that question and you go on to the next one and the next one. It's very important that you write all 4 of those bullet points because there's a Mahala mark for you in there. If the marker can see that you have attempted all 4 questions, and guys, the heading counts as an attempt to answering the question. If they can see that you've done that, they are going to give you 1 analysis mark already. So that is why it's important for you to write all the headings down. Right, then after you've answered all 4 of those bullet points, it brings you to a conclusion. Now the word conclusion must be there, it must show. And after the conclusion, I'm writing 1 little small sentence or paragraph that is a result. If I do this, then this will happen. Or having a public company will result in more capital necessary for expansion, or whatever the case may be. That's a result. That is 2 marks. I only need 1 sentence, but it must speak to any one of those 4 bullet points. But guys, when it comes to introduction and conclusion, just the fact that you have a word there and something written underneath it, and a conclusion and something written underneath it, guys, that is enough for 2 L marks. So now you already have 1 mark for analysis because you've written all the headings or the questions down as headings, 1 A mark. You've written introduction and something underneath it. You've written the word conclusion, something underneath it, 2 L marks. Now you already have 3 marks for knowing nothing yet. But there's 3 Mahala marks. Now guys, let's say you've answered and there were some questions that you answered correctly. You had some correct facts. Then guys, you are going to get 2 S marks as well. So now you have 5 marks for actually knowing very little, plus the ones that you have got correct on your paper. So guys, to get Mahala marks for an essay is actually very easy. Now guys, let's get to those different bullet points. You don't need to get all the marks to still get full marks for the essay. You only need 32 marks. Okay, so I normally work on, if I can get 8 marks per heading, that will give me enough for 32. So don't go and overwork yourself. Make sure that you can get at least 8 marks per heading. That will give you 32. plus the 2 marks for your introduction, the 2 marks for conclusion, and that's your safety policy. Okay, obviously, if you can get 10 per heading, that is always better. Right, now guys, the other marks are made up like this. At the end of your essay question, there will be an abbreviation written that's called FLASO, F-L-A-S-O, an acronym. The F stands for facts. Now guys, they're going to count up how many correct ticks there is, and that is your fact marks. And that cannot be more than 32. So it's going to say 32 max. If you've written a very, very good essay, 32 max, and there you go. Then they're going to see, is the word introduction, conclusion there, something written underneath? Yes, there's the 2 L marks. So you get 2 for L. They're going to check the A marks as well. Now guys, the first one is you've written all the headings there because you've attempted all 4 of the questions, and that will be enough for 1. Then they're going to see, oh, this guy scored more than 16 marks for facts. Then that gives you another A mark as well. So that gives you 2 for A. Then guys, we are going to assume that you're going to get both your S marks. It stands for structure and synthesis. Now the only way that you can lose an S mark is if you write something completely irrelevant. It doesn't have anything to do with forms of ownership. You are speaking about professionalism and ethics or something like that. That is irrelevant, and then they will give you a minus S. The other minus S, if you've only attempted 1 of the bullet points and not 2 or more. So if you've attempted only 1 of the questions in the essay, then that will be 1 other S mark deducted. But in most cases, we don't deduct S marks. So we assume you're going to get 2. Now guys, the last one is the O mark. That stands for originality. Now guys, originality refers to anything that comes from the news that is in the past 2 years. So anything from last year up until the day that you write your exams, you can use as an originality mark. Now guys, that originality mark will only be relevant if you use it to illustrate a particular point that you've made somewhere in your essay. Mr. Edwards, you've heard him using examples of Amazon and all of those. Now guys, if that comes from the news and it's recent, relevant, and everybody knows, then that will be an O mark as well. If you do that twice in your essay in different paragraphs, 2 times in different paragraphs, that's 2 O marks. Guys, just remember very carefully that don't use things from, let's say, the Table Talk or your local newspaper, because the marker might not be aware of that newsworthy article. Use mainstream media, News 24 of any kind, where it was national news that people knew or would know about it. So that's very important. Okay, Mr. Edwards, I think that brings them to the conclusion of an essay. So yep. We don't have enough time to go through the specifics of answering the essay, but that is for me important that you understand how to write it.
Just one thing with the originality mark, it must be something, if I bring up my Google browser, a search engine, I need to be able to type it in there and it's one of the first things that comes up. So keep that in mind when you are doing a little bit of research. I have learners that will research specifically looking for that originality mark, and they often have the ability to get that originality mark as well. Right, so it is possible to find particular information. All right, that does bring us to the end of the session today. Thank you very much for joining us, and your preliminary exams are just around the corner. If I'm correct, it's about 22 days, school days, until prelims will begin. And yeah, we're wishing you all the very best, and we will probably see you in the 4th term.
Yeah, thank you very much, grade 12s, and good luck with your prelims.